My name is Nicolas Moura, and I'm a senior research analyst at PitchBook, covering European private equity. First of all, I'd like my fellow panelists to introduce themselves and their firms. So perhaps, Jessica, we can start with you.
Hi there, I'm Jessica Lennard. I'm the Chief Strategy and External Affairs Officer at the UK Competition and Markets Authority.
Hi, I'm Bashak-Julianna. I run the Client Solutions Group for ICG for Europe. And for those who are not aware, ICG is a multi-strat alternatives manager with around 123 billion under management.
Hi everybody, I'm Hugh Campbell. I founded the GP Bullhound Group about 25 years ago. We have a large tech M&A business and Bullhound Capital, which is our growth equity arm. We manage about €1 billion.
Great. So the UK is the largest market for private capital in Europe. And according to PitchBook data, 1 in 5 deals happens in the UK out of Europe. So my question to my panelists is, in one word, what is the UK's edge today compared to the rest of Europe? And is that edge durable? Bashak, would you like to go first?
Okay, but I'm going to cheat because I'm going to go well beyond one word. So I guess in summary, I would say that there's really 3 key things. The first being the depth and breadth of capital markets, then the well-established infrastructure, and finally, I guess, access to talent and expertise. In answering the second part of your question, I think those 3 things, amongst others, are very, very difficult to replicate and will take several decades, if at all possible. So I do think very much that the UK's edge is entirely durable, and we fully expect that to be the case for years to come.
Yeah. Hugh?
Yeah, we're lucky enough to invest across Europe, and I think what we find in the UK is how easy it is to actually start a limited company. I mean, you can buy one off the shelf for £50, I think, and get going. So that's a very powerful message for entrepreneurs. As part of that, of course, we've got a very, very well-established early-stage tax breaks, whether it's EIS, CDIS, or the VCT environment. So there's no shortage of really early-stage capital. And then if you move further up the food chain, of course, we have the best private equity industry in the world. And why do people say that? Because it's about returns. You maintain an edge if you deliver returns. And then I think finally, the talent side is so critical here. And I guess as a word of caution as well. I mean, historically, we've had a very open market, an opportunity for people to come to this country, whether it's through education or through being entrepreneurs, to start great businesses. Let's look at TransferWise, or let's look at Revolut, for example, 2 great success stories. So we need to make sure that we have an environment in which we can attract and then also retain the talent that we need in order to remain successful.
Thanks. I think my one word is going to be stability. I know we've talked a lot at today's summit around the geopolitical environment and the world becoming just more uncertain and more volatile. And I think in that world, legal and regulatory stability and certainty is something that the UK can really offer. And, we hear about this all the time as the CMA, the strong rule of law in the UK. The UK's institutions, the fair and transparent and predictable processes. And in relation to us, the robustness of the UK competition regime and the independence of our decisions. We hear what a pull factor that is for the UK. Now, that's not to say that the UK regulatory environment can't and indeed is evolving to be more conducive to business confidence and to make the UK more attractive as a destination for capital. But I think overall that stability is what we can offer and should be looking to double down on.
Great. Thank you very much. You had more than one word. That's amazing. I want to transition to capital flows. And again, according to our PitchBook data, almost 1 in every deal in the UK has a US investor on the deal, more than any other country in Europe. Do you feel that the UK depends on those capital flows coming from the US, and why are they so important? Bashak, would you?
Well, I think firstly, around 70% of capital for deals stems from the US. So it's a huge market generally. Then when you layer in the cultural similarities and of course the language, it's not entirely surprising that will be the UK will be a very attractive market. But I think it's important to make a distinction between US firms who are investing actually out of the UK, as a lot of firms have their European headquarters still in London. And actually, so there may be European investment committees, London-based investment committees and teams versus the headline US, investor or the private equity firm. So I think it's a bit more nuanced than just US capital, because often some of that is actually all of the decisions are made right here in London.
Absolutely. Hugh, you want to add to that?
Yeah, I mean, I think in the technology sector, which is the sector that we're very much focused on, I think the key has been to see that US VCs in particular have helped professionalize not just the UK, but the whole of the European venture scene. And for that, I think we should be thankful. But in some ways, enough's enough. I mean, we've moved from a cottage industry into one which is now truly professional. I mean, when I started 25 years ago, we had pools of capital scattered around Europe. Now we have one, I wouldn't say singular market, but we have one investing environment, investing region. And now I think it's really important that we develop our own homegrown set of growth funds, because what we see in particular is not so much US capital at the early stage. I mean, the earlier you are, the closer you want to invest to where you live. So early stage is much more likely to be a local environment. But of course, as the companies get more mature, and naturally in technology, your first market is likely to be outside of the UK, is going to be the US. It's where the capital markets are. It's a single economy. They always claim to be more ambitious and more entrepreneurial and more hardworking. I'm not sure any of those are true, but it's clearly a natural place for many of our investees to head towards. And so we need to make sure in the growth capital space that we have the homegrown funds and capital to make sure that doesn't happen.
Absolutely. I want to move now to exits, and we've seen the UK IPO window appear to be closed in the last 2 years, with volumes year to date at a 30-year low. And my question perhaps for Jessica here, how do you and how does the CMA help these companies navigate around these turbulent times in the exit market?
Thanks. It's a great question. I want to be really clear about this because it's important. The CMA fully appreciates the importance of viable exit routes for companies, as well as the importance of organic scaling. And you guys all hopefully heard my CEO here talking earlier about the work that the CMA is embarking on to see if we can't help unlock that scaling challenge that the UK has. More about that tomorrow when that research is launched. But let me focus on mergers, therefore, for now. So, our view is that every deal that can be cleared, either unconditionally or with appropriate remedies, should be cleared, right? That's a CMA view, and I'm very, very comfortable saying that to a room full of investors. And the reality is, if you look at the statistics, that is, at the moment, as my CEO said, the vast majority of deals, that is what happens. There's around, say, 40,000, 50,000 deals announced every year. We tend to look at about 40 to 50 of those, and maybe 1 or 2 of those every year gets blocked. And those statistics are they're pretty stable year on year. But if perceptions of the CMA's interventionists kind of approach, or the experience that companies have when they engage with us, is out of kilter with that reality, then we are not contributing to that pro-growth, pro-investment regulatory environment that I talked about earlier. And that's why we sat down about a year ago, through the BVCA and had a series of really, really constructive and open and frank conversations with the private equity industry, with venture capitalists. We spoke to startups, we spoke to founders, and we said, look, how do we deal with this perception issue? Because we understand this matters to business confidence. Like, tell us, right? And we've never done this before. This was quite a new approach. And they told us 4 things, and you will have heard Sarah talk about these earlier. They said, look, this is what matters to us. Pace matters to us. Predictability matters to us. Proportionality matters to us. And the process by which you engage with us really matters to us. And we took this on board, and this is where the 4 Ps program that Sarah talked about earlier came from. And so there's about 75 measures now across the CMA that are being embedded across our markets work, our consumer protection work, our digital work. But mergers was where we started, because we heard you guys about how important this is, and that this was really kind of a focal point for that perception issue. So we started with mergers. These are really tangible KPIs, from the remedies review that Sarah talked about to the new kind of pace, the kind of pacier way we're doing the investigations, targeted outreach with the investment community, as well as more touch points, senior contact within deals. You can kind of go and look up. We've actually just overhauled our website so you can find all this information easier, which also matters, I know. This is something that we've really, really taken on board, because those deals, the vast majority of them, as I said, they should go through in a streamlined way. And that should be done in a way that builds confidence.
I need to go check that website out. So we've talked about deals, we've talked about exits. I want to move now on to fundraising. And we all know that London is the financial hub for private markets. And as Bashak touched on earlier, investment teams and funds operate out of the capital. My question is the UK also a source of institutional capital? And where is that LP money coming from? Bashak, perhaps for you?
Sure. Well, I think it's beyond dispute that the UK is a deep pool of institutional capital, given the prevalence of large insurance companies, corporate pension schemes, family offices, and of course, the widely talked about local government pension schemes. But I would say that where I think the UK slightly lacks is the total allocation to private markets relative to other regions. So I think UK investors are still relatively under-invested in private markets compared to other regions. And especially when you factor in the total volume of capital that flows through the UK.
You?
Yeah, I mean, I think London is under tremendous pressure post-Brexit. I mean, we've had to build a whole infrastructure in Luxembourg in order to market our funds. Prior to Brexit, we didn't need to do that. We probably have 1 million of additional costs now outside of the UK as a result of the changes that we've made at a regulatory level. And so I think, London needs to be very careful. It has a very strong historic dominance in this area, but needs to protect it. I mean, when we talk about fundraising, I'd like to just come back to your previous question around capital markets, because as I stepped onto the stage a few minutes ago, Klarna, which is a fintech business originally out of Sweden, has just gone public. I mean, this is a huge moment for European private markets. I mean, that business started from scratch in Stockholm, in Kista, just outside, and is now floating, sadly, on the NASDAQ for $15 billion, and apparently it's popped 25%. So let's see if that holds. We were lucky enough to invest in that business a number of years ago. And so I guess my message to that is that we desperately need the capital markets in order to make sure that these success stories stay here in the UK and in Europe. And another example is Arm. I mean, wouldn't we all feel much cockier if Arm was listed in London? Its current market cap is £120 billion. At least in the technology sector right now today, the largest technology business we have in London is £10 billion with Sage. So it can be some very small wins and losses that can drive the change in sentiment for the London Stock Exchange. And I think that whole capital markets piece is going to be a critical underpinning for the next 10 years.
Yeah, couldn't agree more. I want to dive into sector specifics now and ask you, which sectors do you feel like the UK has the strongest claim to being the getaway for innovation in Europe? And I don't know, Hugh, do you want to kick us off? You seemed inspired with the Klarna story.
Well, I think, we have some very great strengths in professional services, and within that I'd put creative services, I'd put financial services, of course. I think we have a challenge to catch up in AI. We can't possibly say we're a global leader in that, given where China and the US are today. And then I think there are areas like quantum where it's all to play for. I mean, the ball's in the air and we've got to see if we can catch it.
Bashak?
I would probably just add to Hugh, I think it was a very comprehensive list, but life sciences as well. Life sciences is definitely an area where the UK punches above its weight, I would say.
Yeah. Jessica?
So we're a very neutral cross-economy authority, so I won't pick favourites. But what I will say is that the government has now published its modern industrial strategy, and it has this IS8, these 8 priority sectors. I think it's a fantastic thing that we have this coordinated approach now and an industrial strategy lens around 8 priority sectors. And for the CMA, that's really quite exciting, because I think it opens up opportunities for us to do targeted interventions in areas that we now know are going to be focal points for government intervention to try and crowd in investment. So that gives us, certain areas like defence, for example. We're doing work in civil engineering. We have an open market study. Procurement, massive. You heard Sarah talk about this earlier, £400 billion opportunity to fund UK scale-ups if we got it right. And obviously we think that competition could strengthen the industrial strategy in each of these 8 priority sectors. So I think that's a really big opportunity. The other piece that I would just focus on is digital. So many of you may be aware the UK has a new digital markets competition regime. This is a very, very bespoke, tailored, proportionate piece of regulation which is designed to help us unlock opportunities for companies of all shapes and sizes across the UK tech sector. I think this represents an enormous sectoral opportunity for us. And if you dig a little bit deeper into that, you're talking about unlocking areas that we've mentioned a little bit. So fintech is one of them. Gaming is another one, potentially enormous for the UK. That regime could be the way that we do that.
Amazing. So for my final question to my panelists here, if we reconvened in 10 years, so 2035, what would success look like for the UK as a private capital investment destination? Who wants to brave it out first?
I can start.
Please.
I think we have a fascinating opportunity geopolitically in the next 10 years. And that's now that we're in some ways sort of out of the EU, we have this opportunity to tread the delicate balance between the EU, the US, and a country that no one seems to have talked about over the last couple of days, which is China. At the moment, we're not talking about investment from China, which is, at least if you judge the meetings from last week, very soon to be a superpower, at least as large as the US. And I think if we can cleverly and carefully navigate the balance between those three huge economic blocks, we could find ourselves in a very, very successful economic position.
Yeah.
I think the key thing will be continuing to have support to ensure that there are more allocations to private markets across the UK and UK investors in particular.
I will leave those with far more knowledge of investment than I to paint the investment vision for 2035. But what I will say is where we'd like the CMA to be, which is I think we would like the UK competition regime to be globally recognised as helping businesses and investors scale and succeed and thrive in the UK.
Well said. I see we have just a bit of time perhaps for any questions from the audience, if any, or everyone's thirsty.
Go have
Okay.
wine.
Yeah.
In that case, thank you very much for listening, and we'll leave you to drink.